Hi, Tim Bigham for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rbtrader.com. We're looking at a couple big events shaping up. Certainly we have Apple earnings after the close today. We'll see what happens with those. Whisper number well above 2, revs around 55, so we'll see if they meet or exceed. Interesting that this one will be more focused probably on the services revenue rather than on iPhone sales, given the Anniversary 8 coming out. I think a lot of those sales obviously pushed forward or delayed until Q3 or Q4, so looking at doing a dual calendar spread trade based on the fact that I think vol is a little bit overstated, looking for about a 3% move on Apple from the options market. So the Apple around that 147 range. I'm selling the upside 151 calls that expire Friday, selling the downside 144 puts that expire Friday, hedging with those similar strikes that expire next Friday, capturing about 8.5 points of horizontal or term structure volatility skew, just looking for Apple to mark somewhere near that 151 or 144 strike price, break even on the trade ultimately to the upside around 155, to the downside around 137, paying only about 90 cents or so for this spread, looking for really if it can remain somewhere in between those two strikes and looking maybe at a double there. So I like the probabilistic kind of risk profile on Apple on that trade. Otherwise, looking at the VIX, which saw a 9 handle briefly yesterday, clinging on to a 10 handle so far this morning, but option price is getting very cheap in the S&P 500 and generally everywhere. So I'm liking long-term kind of put diagonal spread trades just to position long vega, long volatility, and slightly bearishly. I just think at some point we may get a pullback here. It hasn't happened yet, but that doesn't mean it won't. We have Alitalia just declared bankruptcy over in Europe. The Greece deal finally got through, so we have some rumblings there. China PMI weakening. We have a lot of undercurrents and obviously North Korea always in the mix here. So for the VIX to be at this low level, I think, you know, is really a signal of uber complacency. I think usually that's a sign of a top in the market as well. When it happens, it's anyone's guess, but I'm buying the regular June at the money, the 238 puts, and then just keep selling weekly further out of the money puts to help kind of finance that. As I said again, that trade structure is long vega. I want to be long vol, and I want to be slightly bearish here. Otherwise, using those RB option scanners, Newell Rubbermaid saw massive volume yesterday after a Wells Fargo downgrade. In the May 48 strike, stock is down from about 50 to 46, which is big time kind of support her. Earnings coming May 8th. Someone jumped in, bought over 15,000 of these, drove up the IV here. So I'm liking selling those, buying the June 48s, paying only about 20 cents, liking that term structure vol, which widened appreciably by about 7 vol points to come in, sets me up slightly bullishly to lean with that call paper as well. So until next time, as always, here's the good trading. Take care.